Good turnaround Tuesday, everybody. If you haven't heard about Turnaround Tuesday, it's an old-fashioned trading pattern, and I think you'll notice it if you start following it. And what usually happens is how a market closes on Friday. You usually get follow through into Tuesday. You usually get a follow through if you close strong on Friday. Usually get follow through up day on Monday, with the potential of a reversal happening on Tuesday to correct the recent move, or vice versa for a bottom. I thought I'd start off with was making a joke. I hope no one's really offended, but anyway, let's take a look at some crypto. So, people that want to go back and look at my work here on TradeGate Hub actually saw the third drive here, saw this as a failing rally. Target was 36 grand. It overshot it. But here we go. Under 30,000 now. I actually think there's a chance for a three drive type formation. If I was short, I'd cover here a little bit above 26,000. I still think that we're in a bull market in crypto and that it has to dig in its heels right in here, right around that red speed line. People ask me, Dale, how do you draw your trend lines? Anyone know what my answer is? No, it's not, with a cursor. I draw my trend lines with my imagination. So, I've had mentees ask me that, and they go, well, how'd you come up with that line? How'd you come up with that line? It's my imagination. Here's one on NASDAQ, which, is every bear's dream. So we did get a 2 week reversal, traders, last week. Let's talk about, last week, at one point it looked like, I was under a lot of pressure and I actually added to my D's put position last week on Monday. Of course, my trade selection isn't the best because I'm short triple Q. I had puts in a triple Q contract, SQQQ. So leveraging a leveraged DTF. So what we had here in NASDAQ on the weekly was a 2 week reversal. Remember, I was pointing that out. We closed Friday at 14,684, and the off number was was it 716? Okay, and we closed at 684. So you had a 2 week reversal there, an even better reversal in the S&Ps. And, I remember early in the week saying, it's 30 handles away, but we could get there. But just like everyone else, I had my doubts, except, we diverged on the S&Ps all time frames. Okay, the NASDAQ had more mo going into the high. All right, here's the daily. We confirmed this high and then also this second readings over 70. So the S&Ps were definitely showing relative weakness. NASDAQ is a strength. I'll get to it in a bit. But, that's my coverage in crypto. I want to talk about equity markets because what happened last week might be important. So really, the canary in the coal mine, which is something I've been talking about, has been the Russell. And I look at it through the IWM, which is an ETF on the Russell 2000. And we failed to take out the March highs. So remember, I put out a video that said, sell the Russell anywhere. Okay, now you notice from watching these that when I'm trading leverage instruments, I'm trying to buy at fib levels, or I have spots in mind for price. So if I could put out a suggestion and say sell it anywhere with stops over the March high, shows a pretty high level of conviction because I didn't think it would matter 100 points or two. And we did have the breakdown on Friday. So I also posted in the chat room that 220 would seal it, and we got that. We got that on Friday. So here we are. We have a little breakaway gap. Have to stay with the Russell unless it closes back above the breakout here. That's 216.60, call it 217. If you want to give it a little more tolerance and let it play above this breakdown a bit, 220, but that means you pull your stops down from here over the March highs to now all the way down here. So you should have some profits at the profit stop. Also, what happened last week is it took all the way until last week for the Dow to make a new high, which it posted in May. So May was the last time the Dow made a new high, and we had a marginal new high this day right here. And look at the glaring divergence we had here. I mean, glaring on the daily, 4-hour, 2-hour. So all of these markets are trying to bounce here. And, I think that this bounce is going to fail. I think you have a failing rally here. I know a lot of people are looking for new highs, but I have to go with this weekly reversal in the Dow and, the breakdown in the Russell, the reversal week in the S&Ps, and the off numbers way above it. So for the S&Ps to negate last week's sell, it would have to close over 43.68. That's 100 handles from here. I don't know. I don't think we should get up there. I think there's going to be pretty good resistance up here at about 43.20. Looks like we're going to get some type of ABC, but I'd take a shot at a rip up here in the S&Ps, risking last week's highs in the S&Ps. Look how weak NASDAQ is today. So you're getting this rotation. And when you talk about NASDAQ, it didn't do so well with yields falling. Normally with yields falling, they say that's, supportive. Amazon, I think Tim's asking about Amazon. I think it looks pretty weak, Tim. We did confirm on the daily. Okay, it's a confirmed high. That's the only thing that gives me doubt about this. But on any other time frame, there were non-confirmations here on the 4-hour. So I don't know why 3,400 isn't possible for this initial break, and maybe 32 and a half. But how about the potential of NASDAQ if it gets through 32? Amazon through 3,200, which is quite a distance from here. Very possible that we might even be looking at head and shoulders here, with this ending up being the head, and you have your major support here. But this looks like this was a breakout, right here at 35.50. And right now the market is being so accommodative. It's going to let you buy it under the breakout. Similar to like Russell. I talked to people about Russell. I said, is this, everyone thought it was consolidation pretty much before another wave up, and they could still be right. But I would ask them, how come the market's being so accommodating and letting giving people so much time to get in the trade with the breakout? I mean, this is how it looked on the daily. So this was a breakout. You got to buy, it gave you a couple of days to think about it. Then it even let you buy an aborted breakout, abortion, if you're long it was. and then we broke out again, tested it again, and here you have another chance. So uh, this looks pretty vulnerable to me. If I was talking about a pretty bearish target, why not back to the pre-COVID crash levels over the summer? And there's a gap in here as well, and a moving average here as well. And that's happening while the dollar's moving up to 95, 96. Okay, because even if we do get some kind of correction in the dollar, which right now, it's grinding, it's not confirming, it's kind of a tough call. I've been successful in the last week with. I think this is the third time I'm in on a short in the yen. On the video last week, it was a sell here, covered, and then in TradeGate Hub in the main trading room platform, put out the sale right before retail sales at 18, got out here, and now I'm short from 50. I'm going to be wrong if yields are bottoming here, and I do look at the TLT, and it's a lot of momentum. Um, really not much divergence, and even the short term, even though we may be diverging to so much mo, but in the bond market, there's shorter term we're diverging. I'm sure we are also in the 10-year. So this speed line, it's like a collapsing rate if they don't turn it here pretty soon. Because, this is what, when we were up here, I was looking for this drop. And then I said, oh, I think we could have one more, but then I was looking for this, and now we're getting a throw over underneath um, this speed line. So it's almost like a market, trying to become parabolic. There aren't much in the way of divergences yet. I mean, we are diverging, but it's not my ideal reading. But I'd have a hard time just shorting yields right here, or shorting the bonds or TLT, which I just showed you guys. Who would have thought? And this was another call last week. Talked about a failing rally. Put out some short recommendations in here. I hope you guys wrote it. Back here, I thought I was making an aggressive forecast saying that a lot of people want to buy energy, the WTI under 70 at 69. Who would have thought when I was talking about this? I thought this was an ambitious target. And look at this. So, a huge break in crude in a week. It's almost like what's happening here, but we know OPEC came out. There's some COVID scares that could result in a slowdown, not major lockdowns, and it's more outside the US, at least for now. Um, so, that's part of what might be going on is there is this Delta variant that you're getting breakthrough cases on. Uh, you know, it's a nightmare. Anyway, so here we are. We try and trade through this, and trading actually is a great distraction from the world outside, isn't it? Because turn on your news and bums me out. I don't know about you guys, so uh, I like this action that we're getting here in NASDAQ. Now, here's something else I talked about, and we're playing with a breakout on the VIX. So, I'm not sure, but I do know that I told you guys this looked like accumulation with these kind of hammers, where you'd have this type of wick action. This was happening before the lows. So, pros accumulate. they develop the lows. So, the public selling volatility and the pros are accumulating it. And then we had this false move, but nice trade. I mean, the VIX is becoming a pretty good trading vehicle, for 2, 3 days at a time if you catch these pops. This was a nice trade. Gave it back, but I mean, if you don't learn how to ring the register on a, you know, 6, 8 point move in VIX, do something else. Here's another nice move. So we'll see what it does with the 21 area here. Okay, because if 21 holds on a closing level, then I think you're talking 28 back up here is going to be the next serious resistance level, 29. So we'll see. Maybe it wants to come here and fill the gap. This is a gap, okay? We did leave a gap up on Monday. So that wouldn't be filled until 1870. But VIX acting perky like it's not drinking decaf anymore. You get a pop, a pullback, a pop, a pullback. We have a trading market in volatility. So you know what? That means things are starting to get volatile. If there's any message compared to, periods where we're just doing nothing and nothing. And then all of a sudden it's like, something was in a coma and got some electric shock therapy and has a heartbeat again. So some nice swings going on in VIX. I'm pretty constructive. If I'm right about some of my targets and equities, I think that these highs will be tested, taken out. I don't see why we can't trade up to 60. Okay, lower than the COVID crash, but a pretty big move from here. But one step, one day at a time, do the right thing today, and tomorrow will take care of itself. So we'll see what happens here if we could get through the 30 level. But first, we have to hold 21. Again, Bitcoin's continuing to erode. Let's take a look at some shorter things. Take a screenshot of this so that you have this line and see how Bitcoin, just for fun, don't have to trade it, but see how it reacts to it. Okay, it could end up being what I think eliticians would call an ending diagonal. Hope you guys don't mind when I bounce around a lot. It's just, free form analysis today. So here's your formation. It's not going to take much to generate a breakout back over, say, 33 or so. But 26 looks first, and then there's the falling wedge. And, wedges have a tendency to retrace 100% of their moves. So this means I'm looking for new highs or a test of the highs once we bottom here. In Bitcoin, I don't know what to do besides use a money stop because, I mean, this is all I see. So we'll see what happens here in the coming days. Anything else down here? I think that it's not going to be a great period for commodities. Remember last week I was talking about even though gold was acting great, that and gold's acting pretty good today. And look at the difference between the gold and silver chart. Look at that. And it was because of this breakout at 68.5. Okay. So that was properly diagnosed that silver was your preferred short. The pop to 1830 was properly diagnosed. That's where it went, pulled back over 30 bucks to here. Gold's acting like it doesn't want to fail here. So maybe there's something left. Silver still looks negative to me. I still think we'll go for these stops. And down the road, I think I'm going to take some long-term positions in SILJ when I think silver's bottomed. Starting to get a little bit of a breakdown. I don't think I have this fib right. I think I should put it up here. So maybe 61.8 back at 10 and a half bucks might be a good level, or even 78.6. So I think there'll be a chance to accumulate. These are silver miner ETFs. And you know what, sometimes doesn't happen on a risk off day is this, big gap in junk, pretty negative down day. Junk starts getting back under this 86 level. I know it's hard to think about because since the Fed came in, and I guess they really did buy some corporates, but this is where the bubble is. This is where corporations came in and borrowed money for financial engineering. That's why the airlines had to come in for a bailout because the money they raise in the debt market, a lot of it's used for stock buybacks. So, why didn't they save for a rainy day? Because it rains. Instead, the government bailed them out. And so, what a lot of corporations have is if you're borrowing money to buy stock, that's called having a margin account, right? So, every corporation out there in the stock buyback world um, has a margin account. So, we'll see. I mean, if we got a third drive here, that'd be one heck of a panic. One, two, three. So, and this happened, the down day yesterday happened with bonds, governments, sovereigns having a great day. So, this is showing that some risk is coming into the bond market with treasuries performing and the spreads were just unbelievable, and implying like no risk. So, here's your look at high yield. I tell a rally into the gap and see if it holds for a top pick. At least it's probably as reasonable a short as selling the divergence as you do have a break. Now you sell the rally and see if it sticks, and you have a point of reference of where you're wrong. I do believe they have options on this, and I'm going to wrap it up with the dollar, the almighty buck. That reminds me of the James Brown song, The Pretender. We all struggle for the legal tender, but crypto's not legal tender. And remember, keep an eye on 26. So the Dixie continuing to grind. There is a little wick here. Um, you have the Swiss again failing to make new highs, while Euro is making new lows and trying to reverse. So if you want to play a little dollar pullback, and that's all it's going to be because I'm looking for 95, $96, the Swiss may not be a bad way to go. The best way to go, I still think, is the yen. It's still kind of a weak rally, may try and rally with yields here, but the Swiss right here is kind of struggling. This was last week, the big break. So we're right back into this resistance zone. Put your stops over 60. We start trading up here, you don't want to be short anymore. And you know what, guys? It's okay to be wrong, and it's not okay to stay wrong. And that's my wrap for Turnaround Tuesday. Remember, don't just count your cryptos. There's silver coins, your barrels of oil, count your blessings, and I'll see everyone tomorrow. We have an interview lined up for Thursday with the Pivot King. You're going to want to see Steve and listen to Steve's story. Very accurate trader. That's why he calls himself the Pivot King. There are no egos in this industry, are there? All right, everyone. Good hunting the rest of the day. Adios. Remember, our mission here at TradeGate Hub is to build up and edify traders every day. I've added some value to your day regarding directionality in markets. Adios.